All right, guys. Well, happy Friday. Thanks for everybody being on time today. I'm super excited as we get started into the enrollment process. This is actually where the money happens. We went over at the beginning when we first started training, really understanding quality, best practices for closing cases, additional questions, and making sure that we're meeting with the right decision maker. We went over the deduction process, why that's important, making sure we're over communicating and clarifying everybody's role in the enrollment process prior to us enrolling and meeting with all the employees to actually generate sales, which then turns into commissions when the paycheck happens. Because we all know we can close cases all day, every day, but if we don't enroll and have an actual sale, that doesn't turn into a paycheck. So really the purpose of today's training is going to be best practices for enrolling. Tara Morrison, our regional agency director out of Waycross, is going to be our guest speaker today. Super excited to have her. Last year in 2022, she was our #1 RAD, and she finished the year off in $1,280,000 in sales as a regional AD. And so awesome work to her. They had an awesome year. Her quality right now as an entire team as a director, she has a 2% DCN and a 94% persistency. That is awesome. And so I definitely want to be able to take advantage of her from her knowledge and her career track and everything she's went through to be able to tag team with her in this training as we go through best practices for enrollment. And so Tara, I did have a question because I know, before we jump into actually getting in front of the employee, there are a couple of items that we need to touch on prior to walking into the business. So from your perspective, what are some things as a director that you and your team do to, prepare for or solidify upcoming scheduled enrollment?
Can you hear me?
I can, yes.
Okay. So one thing that we try to do is to make sure that we actually, as far as solidifying, is going in person. A lot of times whenever you try to set them up on the phone or, through email, it's really not a solid enrollment that's set up. So we always try to go in person, making sure that we're talking to the correct person that we need to speak with, getting our roster. It just helps us to be able to have a strong enrollment set up. So whenever we show up, we're not just showing up to see people, we're showing up to actually enroll.
Yes, awesome. Before I jump into this bullet point, there are times I know, you have some teams that don't like to, let's say, touch base. Let's say you have an enrollment scheduled about a month out. They don't like to do like a follow-up or a touch-up because that does give sometimes the account the opportunity to cancel the enrollment. Mm-hmm. So how do you how do you prepare for those? Do you do any type of follow-up, or what determines that specific type of follow-up whenever you have enrollment scheduled far out, maybe in distance, or far out in terms of, a couple of weeks from now?
Yeah, we try to always work that back into our route. So if we have one that's set up, like maybe we closed it at the beginning of April, but they can't see us until the beginning of May. We're going to work that into our route like at least a week or two before the end of the month in April. And we're going to go by in person and, maybe carry them, some cupcakes or cookies or whatever, and just pop in and say, we're really looking forward to seeing you guys. Verifying if we're bringing lunch, if we're bringing breakfast, making sure that our enrollment is still solid, because a lot of times, with this, you find that that if you do it over the phone, they'll be like, oh, well, I talked to them and they're really not interested or whatever. Or if you just show up after setting something a month before, a lot of times they've forgotten about it. And even as much planning as we do, it's just always better to do it face to face, because over the phone, it's just so much easier for somebody to tell you no or to put you off. So just really trying to make sure you add that in just to touch base and in person.
Yeah, Tara, and I do want to also touch on something you also said is getting the full roster. So guys, you want to make sure you're maximizing on these enrollments. And the best way to do that is to prepare the person in contact that's going to help oversee the entire enrollment process and send you the employees. And she talked about getting a full roster. So Tara, how has getting a full roster benefited you in setting up for an enrollment?
it helps us just to be able to know who all we have to see, because for a long time, I did it where, and I even trained my team at that time, hey, just get enough so we can either, if it's a new account, we can submit the paperwork, get it approved. Well, then it seemed like we never ended up getting like the full roster. And it might not be on every case. Some cases you may get a full roster, but I just saw where there was opportunity that we were losing. By being able to have that full roster going into it, it allowed us to know who we had to see and who we hadn't seen. Because we could have gotten into it and they may have told the bookkeeper, oh, I don't want that. I'm not interested. And the bookkeeper's not going to push it, but if we already know that John is on the roster, but he's told the bookkeeper that he don't want to see us, well, I'm still going to have to see John, and at least I have his name and I know who I have to see. If I don't have a full roster, I have no idea if I've actually seen all the employees. And it's just like leaving opportunity on the table, because you guys already know a lot of times people will say, I'm not interested, I don't want it. But whenever they get in front of us, we actually sit down and explain it to them, use the needs planner, they realize there is a need.
Love it. Yes, ma'am. And really, these practices don't change. Whether it's a brand new account or it's a re-enrollment, it stays the exact same. And just to reiterate, it really helps you guys maximize on the opportunity to see everybody. And the seeing everybody keeps the business in compliance with Section 125, because a part of that Section 125 is giving the opportunity to each and every employee. Okay. And so, Tara, there's then the preparation with the account. Well, then there's also with the agent. So what are, as a director, what are practices that you have or tools that you give your team to make sure that everybody has what they need for that enrollment or for that re-enrollment?
Yeah, and I know I don't want to backtrack or take too much time, Angela, but one thing that really helps me with setting up the enrollment and letting them know that we need to see everybody is I go back to my previous experience with what I did before. And we ran a business. Well, by being able to tell that owner, hey, we're going to sit with everybody, and that way if anything ever happened, and they, even if they don't want anything, they sign off on this form, and that's basically your that's your protection. Whereas if something happens to this employee down the road, you can go and say, I'm sorry, they decided they didn't want the coverage, but we have to sit down with them and go over it for them to be able to sign off on it to protect you down the road as well. So that kind of helps too with letting them know again why we have to see them. It's for their protection as well. But moving forward, Angela, like you were saying, with every agent must have, so we need a roster. That's the first thing. Of course, we need a full roster. They need to have access to Epic, of course, or the worksite management report. Personally, we really pull more out of Epic, and I print the policies, just because for new agents, it's really easier for them to read than trying to read the old worksite management report that most of us that have been here for a while remember. You don't have to know the codes. It's right there. You can still do some research, but you may find yourself enrolling in the middle of nowhere or in a metal building. That's usually the worst for us. It seems like with Signal, you don't want to depend just on Epic and being able to pull it on your phone whenever you get there if you're going in for a re-enrollment, because you may not have a signal and you never know what's going to happen with technology. So I always try to make sure that I print off from the account in Epic just the policies. It just gives a little bit easier breakdown for newer agents to be able to understand it. And it just helps them feel a little more comfortable with what they're talking about, instead of trying to be like, oh, I think that's a group term 65, or I think that's a family coverage. It's a little more in depth and helps them whenever they're getting started. And like you said, know how to read them.
Yep. I really like that. I know that the management report has been there for a really long time, and a lot of us go with what we know. We're comfortable with using the worksite management report, but guys, since we're already transitioning into Epic, it is a whole lot efficient. It's more efficient. It is easier to read. And one thing she said was she actually prints off the Epic account details to be able to see, which you guys will be able to see here in a couple screens coming up, what that looks like. But just again, she gives that for each agent that's involved in the enrollment, because you never know, your smaller enrollments, everybody may not need to have them, but for your bigger ones where there may be different locations or it's spread out, every person needs to be able to have these tools. So that way duplicate coverage isn't written. And as far as rosters go, I always get this question even till this day. So when reading a roster, the employee has to be eligible by the end of the enrollment period. So let's say we have an enrollment period that ends in May of 2023 and the account has a 1-year rule. Well, which employees would not be eligible? Well, we know all the 2022, 2021, 2022, February, they're eligible, 21, 20, 10, 22, they've been here for a year. Okay, May 4th of 2022. Well, if today is April 14th, this employee, as of today, does not meet the eligibility rule, but the enrollment period ends in May. So if the enrollment period ends May 31st,
Did you get on this?
2023, then that means that employee will be eligible. So technically all these employees will be eligible. So let me just reiterate that they will be eligible at the end of the enrollment period. And I'm getting some background noise in. So if you go ahead and mute some people. All right. All right, so moving on, and I believe that is actually one of the questions on your worksheet. So moving on. So if obviously I know you guys are going to have employees and that may approach you. You may have somebody that may approach you that isn't even on the roster at all, or that isn't eligible. So what do you do when they approach you, or if they're not eligible on the roster? Well, if they are not eligible on the roster, the employee's word of their hire date carries no weight at all. It only matters what's on the roster. So I get this a lot, is that I end up getting a altered roster. So here's the rule that Brian Kington has put in place in the last, I would probably say 6 months. We had a large Zoom meeting with the ADs and the SAs. So the roster that is received upon the very first application approved out of Epic is the final roster. The final roster. And it's really more concrete now in the last 2 weeks because he's been made aware of people still sending in updated rosters after the initial application has been submitted. So that is no more. First roster, final roster. If any applications are approved and we do get anything altered, then I will be calling to verify hire dates. And what I've found in the last previous week are that hire dates that were listed on the roster, the altered one, do not match what the bookkeeper gave me. They'll change the year to 2022 rather than it being 2023, guys. And I know it's so easy to beat the system in terms of hire dates. But guys, what y'all don't realize is that when we do things like that, the purpose of the eligibility rule is to protect your quality and to protect you, and that if the employee does leave, because it is a proven fact, data ran that employees that have been with companies for 6 months are likely to stay with that business longer than if they hadn't been there for 6 months. Okay. And so with that being said, if the employee leaves, what ends up happening to you guys, if we can't conserve them over to bank draft, is you guys get a quality hit, whether it be on DCN or persistency. You get chargeback. And if you guys remember from the beginning of this training, if it impacts your DCN or persistency, that can also affect your direct pay and bonus. If you guys have commission chargebacks, that can also affect your direct pay. So all in all, this rule is to protect you guys because my responsibility is to make sure everybody's pay is maximized. And so this isn't a rule just to have in place. This is to benefit you as our Liberty National employee when it comes to enrolling. Okay. And so just reiterating that altered rosters after the initial roster is received is not acceptable moving forward. Okay. So Tara, now let's get to sitting down with the employee. We've got to see everybody, keeping in compliance, maximizing on the opportunity, giving everybody the tools. Now, let's say we've sat down with our first employee, and let me just briefly explain something. I know that there are 2 different ways of doing this. You send us your first employee, whichever one is available. I know that other people actually like to sit down with the bookkeeper and the decision maker first, especially those that are kind of like skeptical in the process. How long is this going to take? I feel like this is going to take my employees out of production. I know that the best practice for that is enrolling your bookkeeping and decision maker first so they can see that it really doesn't take that long. Once you alleviate their concerns or address their concerns, then they'll feel more likely to cooperate in the enrollment process with all the other employees. So let's say we've sat down with our first employee and we've gone through and given them the intro offers. Tara, how do you transition from the intro offers going into the needs planner?
So I go ahead and ask a few questions, Angela, and of course, they have the needs planner in front of them. So as soon as I get through with the discount, the discount card, I'm going to ask the questions to be able to guide and give me an idea of what I'm going into. So I'm going to ask those health questions. Do you take any daily medications? Okay. Yes, no. Well, have you
Wait,
taken
can you
any?
pause right there? Everybody,
Mhm.
everybody, please pick up your pen. Everybody pick up your pen. You should have that worksheet in front of you. There's a bottom portion that has a big blank on it. Write these questions down. I see everybody on the screen. I want to make sure everybody's writing as she's going over this. Go ahead, Tara. I'm sorry.
No, it's okay. So I'm just asking that question. Do you take any daily medications? Because usually if you say, do you take any medications? Well, they may be like, no, or do you have do you take any medications for anything? Do you have any diseases? Well, I found that if you ask that question first, that usually allows you to be able to lead in to find out if they have any health issues. So I always say, do you take any daily medications? What medications have you been prescribed in the last 7 years? Now, sometimes this is tricky because people are like, I have no idea, and they'll be like, oh, I've had this antibiotic, or, and that gives you a chance to be able to dive into it a little bit more. And it's able to really go more in depth and be like, no, I'm really talking about more major disease. Like, have you ever been diagnosed with blood pressure or diabetes? Have you ever had cancer? I'm also going to ask them if they've ever been hospitalized, because that's really important. That leads you to know, I mean, they could have been hospitalized for, a stent or something like that. Because some people think that, well, they had a stent, but they're fine now, right? They don't have any blood pressure. It solved everything. But being able to ask the hospitalization question, that allows you to be able to dive more into, okay, well, I know that they don't qualify for the group term, so I'm going to need to go towards an ALX. But if you just ask, have you ever been diagnosed with high blood pressure, diabetes, or cancer, you're not going to be able to really find out, because maybe they were hospitalized for a stent, took care of everything, but we know that once that's pulled, that's actually an ALX. They're not going to qualify. So just really getting into depth with those questions before I get into it, because the worst thing you can do is to skip that. And we've all done it. I've done it. And if you've been here long enough, I'm sure you have as well, is we'll go through, we have somebody sold on the group term and we ask our questions and, oh, I've had a heart attack, or I have diabetes, or whatever. And then you're like having to backtrack, and it's really hard to switch to like an ALX when you've already quoted group term prices. So it just allows you to be able to go ahead and, if there's a need, fill it with the correct product.
Yes, I do like that. And Tara, not only, this goes out to everybody else, not only do you guys find that if you don't ask these questions before you transition to the needs planner, if you don't, and it is something that flags when I'm reviewing the application and when I pick up the phone and call the customer, these are the exact questions that I ask the customer. So if I find out on the call that any of these answers then disqualify a customer, now you have to go back out and rewrite the application the right way. And a lot of times it's difficult because the quotes are going to be different and they may be higher. So not only do you end up finding yourself backtracking at the point of sale, but sometimes agents find themselves having to backtrack once the application has come across my desk in inspection, and that just creates extra work for everybody. And customers obviously don't like it when they see a price higher than what they were originally quoted, and so you end up losing out on the sale altogether. Yep. So again, write these questions down, take a picture of it, because one, it helps you gauge which product that you're going to be going over when you give them the life insurance quotes, and then two, it also helps you just understand and paints the picture of their health and habits, so that way you can better prepare them for what the underwriting process is going to look like next. Okay, so then we get into the needs planner, which is right here. Everybody should have the needs planner that they go over with each and every employee. And I just want to keep in mind, guys, as you are selling, there are two main things that make you a phenomenal quality seller. And that's keeping these two things in mind that we should always be meeting. And I want everyone to write this down. One, need, and affordability. Selling based off of need and affordability. Because what ends up happening is if we sell just based off of need and it's not affordable, they're going to have buyer's remorse and they're going to cancel after they go home and slept and thought about it. If we just sell off of affordability and there's no need at all, then you're going to find that after a couple of times it coming out of their paycheck and they're like, I don't even know why I signed up for this. Let me just go ahead and cancel it. Then they're going to cancel after deductions have started and they've seen it coming out. And so you have to make sure that you are meeting both the need and the affordability, because that's when you can really guarantee that the business is going to be more persistent and not negatively impact you or have any buyer's remorse from the customer's end later on. And so on these two things, in going over the needs planner, Tara, I just kind of want the field to kind of understand your approach when you go over the needs planner, you know, from the employee standpoint to then transitioning. So I know something that in conversation before you mentioned, you want to make sure that the employee's needs are met first and then the spouse and children. So can you kind of role play for us? And then as you're role playing, kind of explain the difference between the different scenarios and why you do what you do as you're flowing through the needs planner, meeting both need and affordability.
Yeah, absolutely. So Angela, if you were to pass away, do you have enough permanent life insurance in place to take care of your final expenses? I'm going to ask that question, you know. So she told me yes. Okay. So let me ask you a little bit about that. I know you said that you're married. Is the coverage through your husband's work, or what's that coverage that you have in place right now?
It's through my checking account.
Your checking account. Okay. Do you happen to know any particulars on it? Like, is it like a whole life? Is it a term? Is it something that you bought, you know, with your house or?
Yeah, I think I have about $300,000 worth of coverage. It's not much though.
Okay. Okay, great. So do you happen to know about what the premium is monthly that you're paying for that?
It's probably like about $25, $30 a month.
Okay. It sounds like that might be term. Do you know if that was term whenever you originally bought it?
Yes, it was term.
Okay. Okay. Perfect. Yep. And that's really good because, you know, you're young, you have children. So, you know, that's going to take care of that need that you have for that short amount of time. I'm going to then explain the term, you know, like your policy is going to terminate after 20, 30 years. I don't know the specifics on it, or it's going to go up in price. So the good thing is, you know, based on the questions that I asked you previously, it looks like you do qualify for our group term 65. Now, let me tell you a little bit about that. And then I'm just going to lead into it. And I'm going to say, you know, what we actually offer is a solution to covering, you know, a longer term for you. So this is going to carry you until age 100. It's going to be paid up at age 65, and it's going to be that coverage to fill in the gap whenever your term policy actually terminates at whatever age you would be, you know, 65 or whatever. This policy is going to keep on because you don't want to try to get that coverage whenever you turn 65, because chances are most people develop a health issue, don't have anything right now, praying you don't develop anything, but chances are you may. And as well, your age is going to go up. So it's actually locked in at the age you are today. Do you want me to continue, Angela?
Yep, and that's a good, so just want to highlight a couple things. So she's educating the customer on what they have. First, she asked what type of coverage they have, because you kind of want to understand what they have. And I mean, we've just been in the business long enough where so many people have term coverage or universal policies, and they get to 70 or 60 something, and they're struggling because their premiums are astronomical. They can't afford it, and they've been paying on it for years. And man, it's just so difficult to be able to educate them later on at that point in life when you can do it right then and there on the spot. And so she has to understand what they have, and then she kind of goes from there. And then Tara, now what happens if they say no, they don't have any coverage? Then what do you do from there?
So I'm going to still educate them, because that's our job, right? We're the professional. We're there to tell them what we provide. So I'm just going to say, okay, well, Angela, I'm not sure if you've dealt with any loss recently, but a funeral today is around $15,000. Some people are like, oh my gosh, I can't believe that. People that have dealt with loss understand and know, oh, I know it was that or more. So I'm just going to say, you know, Angela, a funeral today is around $15,000. In the next 10 to 20 years, suggest it'll go to around 30. Honestly, it'll probably be less than 15 to 20 years whenever it goes to 30,000. So what we do is we actually try to fill that need for your final expenses. And with that, you actually qualify for our group term 65. I'm going to tell the benefits of group term 65. It's portable. So if you ever left ABC Electric, you can carry it with you. The price never increases on it. So it's locked in at the age you are today. You also get some pre-tax benefits as savings as well, because it's going to come out before taxes. And that's all because you're being able to purchase it through your group and through your employer. Now, I'm going to give you some quotes and just kind of see what really fits in your budget for the best. So I'm going to start off at 15, and then I'm going to give you a couple of options, but I want to make sure that it's affordable for you. And then I'm going to give those options and see what actually fits their budget. Whenever I do that, that's showing me, because some people, honestly, guys, they can't afford one more penny coming out of their check. So it doesn't matter if it was $1 a week, they can't afford it and they're not going to do it. So twisting their arm or talking them into it, chances are they're going to end up canceling it because they can't afford it. And that's just the way it is for some people. And so by being able to get an idea and going through the process, like it actually, you can look at them and talk to them and tell, and like give them time to digest the information that you're giving them. Okay. A lot of people try to talk and make the sale. Just be quiet. Like that's one thing that that Gabriel taught me whenever I was on his team. Just shut up. Like, don't say anything, because they may be thinking in their head, whenever you give them that price to look at, they're probably, maybe taking into account their budget, taking into account what their weekly check is, how that's going to affect them. Give them time to think. You give them the quotes and then you don't talk. Make them talk. And eventually they'll say either, I think I'm going to go with the second option. Or I also have people that ask me for more. And so again, I want to keep in place that affordability, because a lot of times whenever you do the larger amounts, it's hard for them to keep them and to afford them. But again, that kind of gives you a chance to tell where they're at. If they're struggling with, I just don't even think I could afford the 15,000. I'm going to work with where they're at, because our job is to try to, help them fulfill their need. If they can afford 15,000, I'm going to give them a $10,000 option, and work it from there, because at least they have something. And I'm going to explain that to them. Hey, $10,000 is better than nothing. If you were to pass away, your family would be super appreciative and grateful to have that if that time came.
Yep, that's awesome. And one of the things that really just stuck out to me, Tara, that what you said was the affordability. You know that there's a need, but the affordability, you want to be able to work with them with where they are at. Because our job is not to take away any food from the table from any customer at all. Is there a premium amount, a weekly pay period that you kind of stick to for you at all in your enrolling practices?
Personally, I've always kept like $20, $20 a week. And, honestly, even going into biweekly, it just seems like people, even whenever you get biweekly, you get 20, maybe 30, and it's really the same. So around 20, again, system is an hour to an hour and a half of weekly wage. I found that, and it's kind of proved like our quality numbers are pretty good. And so the $20 just works for us. And it's an easy thing to remember, especially as you're starting off, because sometimes we may forget, okay, well, they're an hour and a half. Okay, well, do they get paid $10? They get paid $15 or whatever, but 20 is just a really easy number to remember. And I just find that a lot of people don't give kickback from that, because you explain to it, hey, you can barely go and get a meal from Zaxby's for $20. So isn't the protection of your family more than a weekly meal at Zaxby's?
Yep. And I really like that. Some people out there may be like, man, $20 is low. Other people may say, well, I like to stick to 25. Well, you guys just think about it. If you like to stick to something, you don't know the customer circumstances. I have other teams out there that actually ask the customer, our job is to meet a need. So we're going to go through the needs planner and make sure we're identifying any needs for you and your family. And we also want to make sure that everything is affordable for you. So if you don't mind me asking, how much are you making an hour? They give them the hour. And you have to think, if Tara's sticking to $20 a week, how many of our employees that we close cases on, our mom and pop shops, our auto body shops, our tire shops, our some restaurants. How many employees do you guys think are really making $20 an hour? Right? The average employee is not making $20 an hour. So that's the thing is we have to just make sure that it's affordable for them. And that's the biggest thing that you end up finding. And so if you guys know, because when I see the high premiums come in on my end, what I end up doing is I end up calling the customer on any sales that are $1,500 or more in annual premium. So I make sure that before I approve and send it off to home office, that it is okay and good to go for the customer and their family. So guys, where we run into other problems, I'm going to move in now that we've left the needs planner a little bit. I'm going to move into reasons and some guidelines that I look for in inspecting applications to prevent from declines or anything coming back. So I did mention the affordability. So any sales over $1,500 or more in annual premium, I will call the customer. If they are larger sales, I just want you guys to know that I give them not only the pay period amount, but I also give them the monthly amount. That was best practices for me when I was in the field, is if I give the customer, you're going to be having $40 a week come out of your paycheck. That's about $120 a month, $160 a month on a monthly basis. Are you comfortable with those premiums? Because, the wives may be paying the bills, and really people pay their bills on a monthly basis. So they need to be able to get an idea of how that's going to impact them on a monthly basis. And so that's affordability. Now, when it comes to the underwriting side, this is where we're going to be able to dive in. And so this is where your questions on your worksheet start to come in place. So just be paying attention and writing along as we're going through these next couple of slides. So declines, you guys heard me talk about declines, cancellations, and not takens. That is your DCN. So for my new agents, your pay is measured on DCN. Your first, how many months? 7 months. Declines is going to be that D and DCN. So to prevent from any declines, I'm looking for any policies that you can only have one policy per family if it's like an accident protector max or a cancer endurance. I'm looking for amounts that exceed any limits. We're going to go over those a little bit more in detail. People that are ineligible, like ineligible dependents, their ages, and the dependent not eligible without the employee coverage, because you have certain states that have different guidelines like Florida and South Carolina, and the employee has to have that amount of group term coverage before the dependent or the spouse can apply for anything. Okay. I'm always checking rosters. So on rosters, I'm making sure that the employees are eligible, that they meet the eligibility rule. If I have anything that comes in that's altered after I've already approved an application, I am going to call the bookkeeper to verify those hire dates. For re-enrollments, I'm always looking at the Epic account details to prevent from duplicate coverage. So everybody, one employee can have a cancer endurance policy, or cancer care plus was our older one. They can only have one of those, and they can only have one accident protector max. So if you run into an employee that just has cancer coverage on themselves, just an individual plan, and they want their spouse and their children to be covered on the plan, you cannot write them an e-application for a family plan. There's two approaches to this. You can, one, either write them an e-app for their spouse and their children as a single parent plan. I don't like to do this route, but it is an option. The reason why I don't like to do it is because it doesn't allow them the pre-tax benefit. I'm all for the customer. So I'm going to take my time and make sure I'm all for the customer. I'm doing option number 2, which is an L347 paper application. It doesn't take long to do it right there at the point of sale. It's an L347 to convert individual plans to family plans. Okay, and then I'm also looking on group term coverage or any life applications, yes answers. On group term, we can only answer yes to question number 9. I already touched on the sales that are $1,500 or more. So everything that she just went over was really for the new cases. The guidelines on the existing cases, Tara, so your approach that you went over for your needs planner for new employees and new accounts, is your approach different or similar for existing customers that we've already seen?
Similar, yeah.
Okay, so I've got on my screen, I've got an example of the specific account. So guys, she mentioned she prints out the account details. The account details is that second picture at the bottom. you can see how it's a lot different. Well, not a lot, but it is different than the worksite management report in the policy description side. So Tara, if you, in just seeing this example right here, how would you do it differently with, well, you said you do it the same. How do you use the needs planner, transition from the intro offers into the needs planner when they already have existing coverage? What does that look like?
So honestly, I use the same approach. So whenever I'm starting off, I'm going to ask them so if I was using, I guess it's Andra Young as an example. So I've already looked, as soon as she sat down and told me her name, I'm going to look through my list. I'm going to make sure. The other thing is, guys, make sure you still check the list, because of course there's only 3 policies on this one. It's pretty easy to check. But if you've got like an account that has a bunch of policies, they may have a different name. I found whenever I started, we worked an account in Savannah one time. We had a guy that his name was listed 3 different ways on the worksite management report. And he had 2 cancer endurance policies that he had been paying on for years. Home office ended up sending him back like a check for over $2,000 because he had 2 cancer policies that he had for, I mean, multiple years. And it was an account that we serviced every year. So it's really taking that time to look through. So maybe somebody misspelled Andra's name, or maybe that wasn't her first name. So just make sure you're looking through and just doing your due diligence, and there's not multiple policies, because that will catch you whenever Angela checks it. And if she catches it and they already have, a cancer endurance policy. I know Andrew doesn't, but so I use that while I'm sitting down, while I'm building that rapport. I'm glancing at my report and I'm knowing what she has in place. I always try to, like, I'll take my needs planner, and sometimes it smears if you write on this page, but I'll even go to the back with their current coverage and I'll write. So I'll go ahead and write down, Andra, group term, $10,000 or $15,000, and the weekly amount. I don't know if this is a weekly franchise or not. The weekly deduction. That's going to help me be able to do whenever I do my salary direction form at the end. But I'm going to lead into it the same as I always do. I'm going to say, okay, Andra, well, we're back again this year. I know you remember us coming back last year. We're going to renew your accidental death policy for you. Now, you may have gotten a bill for $4 in Florida, $10 in Georgia. Just make sure you throw that away. It's not any good. We're going to renew it now for no cost. We're going to also renew your no cost discount card as well. Now that's vision. It saves you on vision, hearing, prescription, chiropractic care, between 10 and 85% on those services. Then I'm going to lead into my needs planner. Okay, so Andrew, we've already got $15,000 in place that we put in place last year. Now I'm showing John, your spouse, is the beneficiary of that. Is that still good? Do we need to make any changes on that? If she's like, yeah, that's fine, I'm going to say, okay, so Andra, I know we put in place the 15,000 and you saw the need of it. And whenever we went over it last year, the 15,000 will cover your funeral, your final expenses, but that's right now. So we talked about it last year. We want to be able to, be in a plan that's affordable for you. You do have the option to add some additional coverage. So that's whenever I start asking. Of course, I've already asked the questions. Did anything change in your health since last year whenever we saw you? Were you prescribed any new prescriptions that you take? Were you hospitalized, and no new, blood pressure, diabetes, or anything? I'm still going to verify. I'm not just going to assume that she's healthy, even if she's, 25 years old sitting in front of me. We worked an account not too long ago that the guy was 18 years old and he was on blood pressure medicine. I mean, who would think that an 18-year-old was on blood pressure medicine? So, I'm asking those questions ahead of time, even though we've already met with them before. And that's whenever I lead into it, Angela, and I'm still going to keep that affordability. And I'm going to write it on the same page with the current coverage that she already has, so she's aware that this is in addition to it.
Yep. Yeah, and the good thing is also, for the employee, they get up to $50,000 worth of group term coverage. So if it's affordable for them and meeting in their budget, they get the pre-tax savings of a full $50,000 for this employee. So there is more room for them to increase their coverage for this specific employee example. So I'm going to move on, guys. I'm going to kind of rush through this a little bit faster, because I know we're cutting close to time. This is recorded, but if you guys are like, man, she's talking fast, just know that it will be out here for you guys to kind of replay it. So a couple of things that I'm finding a lot of lately here is checking the height and weight, guys, for group term coverage It only flags the height and weight chart for the employee. It does not flag it for the spouse or for the child. So I will be checking these a lot more thoroughly and making sure once we see that it does not meet the height and weight chart at the bottom of the group term application, then what ends up happening is it ends up amending to an ALX plan. So double check height and weight, please, 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 especially for the spouse and dependent, because the system does not allow you to do it. We already talked about duplicate coverage for Cancer Care and Accident Protector Max, but moving on is now limits for specific coverages. This is on your worksheet. So as we're moving down, group term, issue age 40 and under is 150,000. Group term, they can only have from the age 41 to 55, 100,000. If they're 56 or older, or if they have any dependents, their spouse or their children, they can only have max 50,000. Career Life Plus 50,000. 10 RCW 200,000. And total worksite life 250,000.
Angela, I have
Accidental
a quick
death
question.
coverage. Okay, can you pause right there for 1 second? I'm gonna let you ask questions at the end of the training. I gotta fly through some material, but hang on 1 second, please. For accidental coverage, 200,000 per policy, 300,000 total for all policies total. And then cash cancer, 50,000, and in Georgia it's 30. Critical illness, 50,000, 25,000 in Georgia. Okay. For 10 RCW, that is only for the employee. They can only have it for the employee, and that is life coverage. They have to have $10,000 worth of group term. And that is also going to be included in the $250,000 max for all life coverage. I'm going to keep going here. Now for life insurance, guys, I want everybody to write these two things down. Anybody over the age of 50 is going to have an automatic prescription drug check. And anybody that answers yes to any health questions is going to have a quality assurance call. Let me say that again because I didn't say it right. Anybody over the age of 50 is going to have an automatic prescription drug check and a QAC call. And any yes answers to any health questions is going to be an automatic quality assurance call. For group term, the only question that can be answered yes to is question number 9, which is only for high blood pressure. They can only have high blood pressure and qualify for group term. And their blood pressure reading must be controlled. The max reading is 140/90. And this is where I run into the most very few underwriting notes is when they do have high blood pressure, guys, we're not listing the medications. So we need to know, let's write this down, the name of the med, the dosage, and the frequency. The blood pressure reading, their most recent one, and then the year, month, and the year that they were diagnosed. If they have had high blood pressure within the last year that they were just diagnosed, we cannot write them a group term. They have to have had blood pressure for 1 year or more in order for them to qualify if everything is controlled. If it's not, then we need to pivot to a COP. So here's where the biggest turnaround that I get on applications that I review that I have to go back out and make the agents rewrite. And I want to be able to train on this so that way you guys are doing it the right way at point of sale. So for Career Life Plus applications, there is only one. So let me explain something. Career Life Plus is guaranteed issue with a minimum face amount of $1,000. You can quote the customer for $30,000, but if it goes through the underwriting process, it can either come back 50%, 15%, or $1,000. And a lot of times our customers are not happy and will not take that coverage if it's been modified drastically like that. So the only time you're going to pivot from group term to CLP, this is the only time, is if high blood pressure isn't under control or monitored with daily medications. You're going to have your employees that say, I don't know what my last blood pressure reading is. I really don't check it. I haven't been to the doctor in like 5 years, honestly. And my medications, I just take it when I can. Some say that you're going to have your customers that know my last blood pressure. I checked it this morning. I take my medicines every day. I'm 25 milligrams, lisinopril. And then you're going to have your other ones that are just unaware, don't care, could care less, don't take their medications, or have taken themselves off of medication. Well, guys, they are going to trigger a QAC call, and their underwriters are going to pull that application. So go ahead and do it right the first time. And I even call on the customers when they have health questions like this to make sure that they are prepared and that we've written them the right life insurance product. So that's the only time we should pivot to COP. On COP, if there are any health questions answered yes, guys, it is going to be a 50%, 15%, or $1,000 face amount issued. So with it being that drastic of a modification on face amounts, guys, I highly recommend, let's just go out and write them an ALX initially so there are no surprises, because guys, surprises kills all deals. And if they're not happy with how their life insurance issued, they may cancel everything if they gotten health coverage, and they may just cancel it all, which will be an even greater negative impact on you than if we just would have done it the right way. Okay. If the height and weight is not within standard, we should be pivoting to ALX. Even if they have COP and they're not within the build chart, we should be pivoting to ALX, because if I've seen here in the last several weeks, COP policies come back on children and on spouses because their height and weight has only been 4 or 5 off, and it's like a table P rating. Table P, which is more than like 50%. And the customers are not taking it because they were not prepared for it. It was a surprise, and we should have just went out and wrote them an ALX. Okay, so that's for COP moving into, going from group term COP or ALX, just trying to understand which life insurance is best for the customer. Okay, guys, so here is the last bit of our training as we close, solidifying on the sale, guys. This is the last 3 minutes that we can spend. I know sometimes we've already gone through and went over everything with the customer. We need to make sure we spend extra time at this very end so they know how much they're buying, what they bought, and how often is it going to be coming out of their paycheck. Because if that customer does not know this and they go home and discuss something with their spouse and their spouse has questions or anything like that, guys, it is going to cause buyer's remorse. So we just have to make sure that we close on the sale properly and slowly so they know what they have when you walk away from that sale. And a lot of that is done on the needs planner. These needs planners should be sent home with the employee, so that way they have them. And they have everything that they have. That's the needs planner. And then what you're actually going to go over with them where they sign is going to be the salary direction form. So this is the documentation that we have to use that we deliver to bookkeepers that allows the bookkeeper to know that this employee has authorized X amount of dollars coming out of their paycheck. Okay, this first portion of the salary direction, there are four bullet points. The first one, even though there's a right to an examine when you get your policy, these deductions are going to be in place for 1 year, Mr. Employee, and you cannot make any changes unless you have a qualified status change. The second one explains that the benefits are in effect for that full year. The qualified status change is the only way you can make that change if you have marriage, divorce, separation, death of a spouse or dependent, or anything like that, a birth of a child or a dependent. That's the only time that you can make changes within the plan year. The third one, good thing is that we come back and see you once a year, and that gives you the opportunity to add or drop any coverage that you have. And then lastly, you're going to get your policies in the mail probably within the next 10 to 14 business days, as long as you've met all the underwriting requirements within that time frame. So you should get it. If you haven't received it by then, feel free to please give me a call. Okay. And here at the bottom is where we talked about what's going to be coming out of your paycheck. And so on the salary direction form, Tara, can you tell me, do you list the existing premium deductions along with the new for existing customers, and why?
Yes, absolutely. So I had actually an essay at one point. Honestly, guys, I think it was just lazy. Just put just the new amounts, and we ended up losing an entire franchise one time because they only thought that whenever the bookkeeper got the deductions, all it had was the new employee deductions, and they thought that was the new deductions. That was the new enrollment period. They didn't realize that there was still existing deductions. So it's really important to make sure that you have those existing, and I always circle the new, just to tell them, hey, it's going to be an additional amount. And also make sure that you're totaling it at the bottom. Take those extra few minutes to double check and make sure that your figures are right. It'll also help you whenever you go to do your deductions at the end of the month. Just double checking all your, dotting all your I's, crossing all your T's. It's just really important to make sure you go through that with your client to make sure they realize that they're adding that.
Yes, and I call on, when I say $1,500 or more annual premium, that's including existing or new. So if you guys aren't doing that at the point of sale, and I do that on the phone, and they're like, what? I thought you were saying you're just going to be $20, not an additional 20. So now that's what, $60 a week? I'm definitely not doing that. Then I catch it on the back end, and that ends up being a lost sale for you guys. And I don't want that to happen, because my job, again, is just to maximize on everybody's pay. And so on this step of the process, guys, when you're totaling everything, some people like to say 1764 pre-tax. Mr. Employee, you're going to have 229 post-tax, which is on my screen. I add them together when I do my call. I say, Mr. Employee, I just want to call to verify that you're comfortable with your premiums. I have what's going to be coming out of your entire paycheck is $19.93 a week. That is per paycheck. So on a monthly basis, you are looking at about $79 a month. Are you comfortable with that premium? Great, awesome. And then I just make sure they understand they can keep it for a year. So I don't give the pre-tax and post-tax. I give the full amount, because guys, they need to hear what they're going to see on their paycheck. And what they see on their paycheck is going to be the $19. Some people like to sell, giving them the pre-tax amount that's going to be coming out. You can sell on that, but when I close on my sale, you need to be closing on the total amount they're going to see on their paycheck, so there are no surprises. Because at the end of the day, where quality comes in is surprises kills all deals. So just kind of recap, in the underwriting process, we want to make sure that when we have, and we've written life insurance on anybody over the age of 50, or that have answered any yes questions to health, or that have really high premiums over $1,500 or more, Mr. Employee, you are going to get a call from my quality manager, because the premiums are a little bit higher. And so that call is going to come from her. You're also going to get a call from our quality assurance department as a second quality call. And that's going to come from our office in McKinney. And they're just going to ask you some underwriting questions. And that call does take about 5 minutes. So we just really appreciate you being patient with us in the underwriting process. And then from there, once everything goes through underwriting, your application should issue if we don't find anything else in your health or habits through the process. Okay. And so that's preparing them for the quality assurance calls that are going to come. And as Tara had asked the questions initially on the prescription checks, if we ask that prior to, we should already be tackling and addressing any health question or any health or habits that they already have that could be red flagged in the underwriting process. I know we went over a lot of information in a short period of time. Tara, I really appreciate you going over just your best practices for the enrollment process. Just one last question for you. I know you are an RAD and you've been through the agent, SA, AD role, RAD role. Here you are now. In this, in quality and in understanding, better enrollments or best practices for enrollment hasn't always been this same way, I can assume. So what have you learned, and how has it changed for you over the course of your career track?
Well, I started out as an agent, just like most people that are in leadership have as well. I didn't know anything about quality. It's not anything you're going to learn the first day that you're here. It takes time. But one thing is, this is your career. It's not your SA, it's not your AD's, it's not your RAD to teach every single detail. We're here to help you and to teach, but some things you have to take ownership, because this is your career. This is your business. You're building it. So we provide the tools. And one thing I found whenever I started, I didn't know anything about quality, guys. I feel like I'm pretty educated on it now. So whenever I was a supervising agent, I had a little quality issue, and it's kind of like the running joke with most people that have been here for a while. But I was on Gabriel's team, and we had a great team that year. And I was #1 SA that year. And Gabriel thought that my persistency was the same as his, but kind of find out it was a little bit different. We didn't have an Angela at that time that kept everything in front of us. And we are so blessed to have her, because before it just wasn't in front of us. We just had to pull everything. So I wasn't as familiar So I lost the #1 SA of the year that year to Gerald, the other supervisor, the other agency director here in Waycross. But it was a learning period for me. We all go through bad quality. If you work with a company long enough, you're gonna face bad quality. Do not allow bad quality to cost you a career. Okay. If you do face it, you'll work through it. And I promise you, there's light at the end of the tunnel, even as bad as it is. Mine was never, Gabriel always used his own commission account as example. I never was at that point, but he's living proof that you can work through it. I'll work through bad quality. Just make sure you understand it, learn from it, learn what you can do to protect yourself from the beginning, learn what it takes and what's going to affect you. So, we've all had agents that went in and wrote a lot of premium. Well, that's great to have that good paycheck, but is that one good paycheck worth costing you a career? It's not for me, and it's not for most people. And if you're here, invest and learn about everything. And we do provide the training, but just learning it. And it's something that it might not be from the hours of 8 to 5 on Fridays. Sometimes you have to research and learn this stuff on your own to really understand it. Ask the questions. If you get an answer and you don't understand it, ask somebody else, or, I have been so blessed with my career to have so many people that have invested in me for nothing, just to help me. And there's so many people in this company that want to help others. And maybe your AD doesn't quite understand exactly. I guarantee you, they do not mind you asking questions to get an answer to make you a better agent, because that's what it is, to making you a better agent, to be able to help you in this career, because we want it to be long-term.
Yes.
And just make sure that you ask those questions, because there's people all around you that might know an answer and be able to help you. Just don't not get the answer and not understand it and just go away and forget about it. Find it, continue asking the question until you understand it.
Yes, and Tara is actually living proof, guys, that she's been through it. And in the last year or so, she's been riding on a 90+ persistency, actually using quality as a factor to make more money, just doing what you guys are already doing. So I appreciate y'all's time. Thank you so much. Happy Friday. I hope y'all have a blessed weekend, and we will resume the Friday after next. Y'all
Real
take
quick,
care.
Angela, I have Angela. Oh, she hung up. Hello?